Hello guys, welcome to a Trading Parrot. We just had one of the most fun price action on a weekend for Bitcoin in quite a while. We went all the way to the top, hit 106, got rejected 3K, and then attempt to take the rest of the red liquidity at the top end up until 107 just to see a rejection of 5K in the price. So the question at hand right now is, are we gonna continue hammering the top of the range to possibly put a new all-time high, or are we gonna do something about it first against this 100K that hasn't been taken? Make sure that you don't miss the part where I'm going to do the due diligence, which is to update this chart where I explain what is my picture in regards to the 4-hour, daily, weekly, and monthly. Let's do it together. By the end of the video, hopefully you're gonna have the full picture, and I'm hoping that's gonna help being ready for the trading session and the rest of the week. Guys, if you like this type of content, make sure that you're subscribed to the channel. Hit the notification bell to get notified every time I put out one of these videos. And we really did an amazing job with the likes on Sunday and Saturday. Particularly on Saturday, we got to 800 likes. I think people really like my reference to Game of Thrones. That means that still people have it very clear in their memories. So we're gonna continue hammering the like with some gore elements and see if that really helps extracting the interiors from the Google algorithm. Let's get 1,000 likes. If we can get that, we can put the YouTube algorithm inside an Iron Maiden. I'm sure with all the juices, YouTube is gonna show the video to a lot more people. And as you can see, many traders are already starting to notice and post just this morning that liquidity has been hit on both sides, particularly the high leverage ones. And that is probably not very helpful. That is just a retrospective view. Probably what you value is to know these things up front. Well, how much up front is it useful to know these things? Well, on a Saturday, to know that the next week trap is ready and that 106K could be a bull trap instead of a, hey, look back, this happened. I don't know how you can manage to trade something that has already happened. Matthew is pointing out the rule number 1, which I actually agree. Consolidation in an uptrend favors continuation. Notice that this is a daily chart and it was taken right at 106.4. So far, we have had a rejection from there, which makes it a very tricky situation. Now, we're gonna look at the weekly time frame at that sexy close that we managed to have right before the rejection. Let's do a little bit of speculation on what's going on in there. It's gonna be fun. Jaded says that the bearish engulfing into bullish engulfing into bearish engulfing pattern is pretty interesting. I agree. I think last night I saw the rejection from the 106. This was the first move up into 105.8. And Tom was asking me what's going to happen with the MACD and the RSI breakdown on the daily. And this is what I mean by multi-timeframe thinking. At the time he was asking me that, we were at the top of the range. We had a rejection right after this, but I still was thinking that there was a lot of liquidity on the table. So after the rejection, we went into 103, I think, or 104, and we still managed to take all the way to 107. And that's what I mean by the pump should still be in progress. Because even though we left just a week, that is typical reaction when you're liquidating the shorts, and usually you get another attempt to take what's left. Not always though. Let's have a look at some other traders. I'm really curious how people are seeing this move up, and I think we have kind of a mixed bag between people saying, well, this is fantastic, we put a higher close, we should continue with the trend. Some other people are a little bit more pessimistic. Cobra Trader says, make or break here for BTC. Last time this median line was hit, we got rejected. That was earlier in May that we hit that top and we saw a big rejection into the low 100s. After that, we carry on insisting and we went back to the same red line there. Ali Charts is saying that there is a big rejection against 105 900. I think this was probably the first one. It's a 1 hour chart and calling for support at 103.4 and 101.300. This is just a trading range with support and resistance. Titan of Crypto is using Ichimoku clouds in here. It says BTC reacts strongly from a key confluence of supports, the Tenkan line, Ichimoku, and the daily fair value gap that we have in green right below all this price action. Momentum remains intact, bulls still in control. CRG, macro CRG, is saying pain, showing asymmetrical triangle, a breakout, and back into the previous range. It makes it look really like a failed breakout. We'll have a look at the RSI and we'll see if on the 4 hour this is really a failed breakout or if it's just a retest. On the price action, it's clearly a failed breakout, but on this RSI, you're gonna be surprised to see what I'm about to show you in just a few minutes. Bitcoin.com news is saying that the correction could be in place or maybe taking profits. BTC price just dropped about 5k in a matter of hours. What's your take? Crypto Anoop, you can see the account there. I do recommend that you watch his YouTube channel, although if you are allergic to accents like mine, for example, then you are also not gonna like his channel. I do follow him, and back in the day when I was learning to trade crypto in particular, I took a lot from his channel. I think I started using CPR thanks to this channel. We're talking about maybe 4 or 5 years ago. And Anoop is currently saying nothing major yet. BTC is still trading below resistance. A pullback to 91.92 zone remains likely and wouldn't be a concern. I agree, it's still possible. Pretty much every day we talk about that heavy liquidity there, and we will see if the downgrade of credit for US could have an actual impact in today's session. So far, it hasn't had such a big impact. By looking at general markets, it's still very humble. Looking at the charts, it looks very similar to this area in here in October before the breakout. Stock Monkey Lizard is saying usually not a sign for a nearing breakout. Overall structure is still very bullish, but we might see a retracement, correction from here to also liquidate late longs. And currently the news, the top one in editor's choice in here, is all about the weekly record weekly close in all history of Bitcoin, which is obviously very bullish, and it really feels like it's trying to get more people attention in here. Right after that, we have a little bit of an article calling for caution in here. In the hot stories, we got 2 bullish articles calling for 250k and 116. From the point of view of CME, remember that we closed at 103.7 on Friday, and we talk about a potential move into 106. What could be the effect of that? And we made an emphasis on potentially putting the 4th CME gap below the price in the close proximity. That's excluding the 54 that we have way lower. And we did put a gap, and the gap got filled pretty much immediately when we made the move into 107k. So that means that currently we do not have a CME gap formed by this weekend. We still have 1, 2, and 3. You can see the prices on the screen. So let's start looking at the 4 hour and daily, and as we go, we're gonna start updating both text inside each of the boxes and the colors if we need to. So here's the thing, this move up that we have done in here has effects in the liquidity pools and has effects in the closing prices of daily and weekly. We need to pay attention to both things, and we're gonna get a bunch of things, outcomes, takeaways that are going to be conflicting. We're gonna capture them here, and we're gonna see and try to build a new narrative for a next move. The intention is not to forecast with accuracy, but mostly to have an idea of where is the risk, what has the highest likelihood of a move. Accepting that we can be wrong and managing that risk is very important. It's a lot more important than getting it precisely right all the time. That's how you defend your account and get to keep it while still being slightly wrong. So I'm gonna focus first on the 4 hour on the RSI and referring to this particular tweet that I show you that shows a completely failure of the RSI, of the price action, sorry. So let's go and see the equivalent RSI in the chart, and you can see that we were defending this area the resistance. We broke out on Sunday, we went to 56 and then straight into 67. At that point is where we started consuming the liquidity pools, the larger ones, in the shorter term. That caused an immediate reaction on the price, and then the price went higher into 107K, but the RSI went lower. I wouldn't say that that is a bearish divergence because each candle is right next to each other, and in order to form divergences, I prefer to see pivots. A pivot is something like this, something like that, and stuff like this. This is just part of a single wave, in my opinion. It was the wave that played the role of hitting liquidity at the top end. So after we complete the task, price retraced back into the white line to test support. And I will say that currently what we are doing is testing that support. We are testing this bullish order block to see if that holds the price at 101.8. So far, it has only pinched below it and came back above support. We'll see if right after this, we can get another move even higher than 67. We need to update this yellow line because now our support or resistance, depending on how you're seeing it, is located at 48. Therefore, I'm gonna move that from 50 into 48 and we'll see the ongoing progress of holding the support. The previous candle closed slightly below 48. This candle is still below it, but we have an incentive to go into 103.5 to take this fair value gap located right above the price. I would like to see the price to come into 103.5, test that, and see if the longs get excited with the test of support for another impulsive move. For continuation beyond that 103.5, we do need to see a green day in general markets. So far, it's looking into the negative with the futures. If that continues to be the case, or if we start entering into a deeper correction, deeper rejection on general markets, thanks to the downgrade of the credits of US, which was the expectation from many people, but so far they're kind of disappointed with the humble move down. So if we get that larger move down, definitely the highest we can go is to 104, somewhere around there, see a rejection, and then down we go. If we see a green day, we are probably not just gonna take the fair value gap, but actually do another attempt to get the highs. And you're gonna think, why would we go higher now that we took almost all the short-term liquidity? With a green day of general markets, we can carry on taking all of this. So far, we have done 1/3 of the yellow with this pinch. If we take all the yellow, we complete fully that task, we get an all-time high, as easy as that. But it's gonna be a little bit tough, in my opinion, to make an all-time high if general markets do not recover from the fear that the downgrade is currently putting in traders' minds at the moment. So as I see currently the RSI, I will keep it in this brown red. Why is that? Well, let's update a little bit. I will say the pullback is completed with the RSI breakout that we had. We have a new higher high, and that is bullish. We're just gonna say that the breakout retest is in risk. Is it failed? No, I wouldn't say it's yet failed because we are too close to the white line. It's not like we have broken down and put a candle close here at the 30s, something that really is impossible to neglect. Here we have a hidden bullish divergence, higher low, and another higher low, and that's how we are defending the 4 hours so far. So the only reason I'm not upgrading fully this 4-hour time frame into an uptrend, even though you can see that the RSI is already putting those higher highs and higher lows from precisely the second hidden divergence, it's because price action has come back right from where it came from, putting a new low at 102 relative to 102.8. So that's why it's still in the neutral bearish on the 4-hour. On the daily, regardless of all the shake-offs of 3K up, 3K down, 5K up, 5K down, and all of that stuff, you can see that the RSI had the picture really clear. Yesterday, we talked about repeating a revenge rally, but this time against the second line that we already lost, and that meant to go into RSI 73. Right after that, I say, do we need to make a forecast of what's going to happen right after that? Well, I will expect a pivot of rejection somewhere at a 73, but I didn't say anything about potentially putting a new low or right after that putting a higher low. That's completely new in the chart. And you can see that today, so far, the day is putting a lower low, but it's an intra-candle, so we cannot really judge the daily by this move into 60 because it might end up closing at 70. You never know. After all, it's just a pivot and a rejection from 73. That's how far we went with the analysis. If we close like this, hypothetically speaking, that is a red engulfing candle, and it looks like an ugly rejection from the top of the range in this trading volume profile box that we have that ends at 105. We went to 107 and we came back to 102. That doesn't look great. It looks uglier, in my opinion, than what we did in here in 94. If we can manage to hold the 102.8, which is the daily support, with the order block as well there on the 4-hour, we could repeat something like we did in here. Hold 93.3 and let's go for a breakout to the top. From the point of view of the RSI, you can see that RSI 73, I gave you this band of orange and yellow. You can watch the video yesterday and you can see that the price perfectly reject the band. Indeed, it reject from the first line. The second candle, which is already Monday, went halfway between the two lines. So we could say that the trap scenario play out. Now we need to understand if it's a long-term trap or if it was just a trap like this one, where you go up, you pinch the point of control, come back down, disappoint, take long, late longs, and then do the actual move to the upside. If that was the case, then we spend a few days in here and then suddenly we go for the 113 or 120 and the longer term liquidity at the top. If we take support, we don't trade breakdowns of horizontal levels, but if we close a daily below here, watch out for that liquidity hunt from the bottom, reclaiming the 102.8 on a daily basis from there. That is actually bullish. What is not bullish is to close below, to retest the 107 and see a rejection. Those patterns, I identify them while being already on a short for continuation and expansion of the profits, not for the entry. I hope you can make the distinction there, because entering on breakouts of horizontal levels straight from the price are more often than not traps for retail. So on the daily, we have a confirmed MACD bearish cross, an increase in the momentum going down, an attempt to reclaim it and carry on up. But so far on the daily price action, we are seeing in here a rejection. Let's see what generals markets have to say when they open. If we get the green day or if we get further downside, then we're gonna make wider this rejection together with the second line of defense lost on the daily. So far on the daily, the only thing I have to say that is bullish is the defense of 102.8. But the rest of the things on the daily with this intra-candle red that we see in there so far are not great. If by the end of today, we are back above 105.2 and we close the daily above 105.2, then the full picture changes dramatically, because we get a green candle breaking into 106, an engulfing one that got completely bought up until 105, and even if it's red, it means that we are going to continue going higher. We are defending the breakout on the daily and possibly going higher. That is really tricky here because we have lost already two levels and we have the bearish cross. But hey, if price does that, we get an invalidation of the two momentum indicators saying no, continuation to the upside. We are going to continue liquidating people. So can the price go up and it can go down? Why am I watching this video? This is a waste of time. Yes, for you, my friend, it is a waste of time and you should watch channels that are more appropriate for your limitations. I'm sorry, no one say that this channel is for everybody, but I'm gonna repeat just in case you still have the chance of getting the point. Closing above 105 confirms that the breakout on the daily is going to continue with the rest of the liquidity at the top of the range. We're talking about getting even into an all-time high. Got it? Closing at 102.8 means neutral because we could continue in a scenario like this, defending the support for another attempt, a later attempt. Breaking below 102.8 and not being able to reclaim it settles the deal for a journey at the very least into the point of control located at 97k. Is that the end of everything? Not necessarily. Look at this price action. Sideways, up, sideways, up, sideways, retest, and up. Is that looking bearish to you? No, not yet. What looks bearish? Well, if you do something like this and you come back into here, that is a little bit more of gray area. Why is that? Well, because you're pinching the range support. I hope we are still clear here on the weekly that we are just starting. Today is Monday and we managed to put the highest weekly close in the history of Bitcoin. So am I gonna downgrade the weekly? Not yet. We are intra-candle on the weekly and this red candle that looks ugly is just the first few hours of the week. We still have time to do absolutely everything. We can even overtake the highest close and put a new higher close, and then this is just gonna turn into intra-candle price action. So too early to say. I will say that the weekly is intact and I'm gonna keep it intact. Healthy uptrend, but against resistance, highest weekly close in history. So it's still green. Let's update the weekly and now the daily. This, instead of being the second breakdown, now is the second revenge rally. From a second revenge rally, we probably need a little bit of cool down before attempting that, as I explained, similar to what we did around the 97k, that we came back to the support and we stay there for a few days. 1, 2, and on the third day, we attempt again the same highs. You can see how the rejection of the revenge rally comes back into this support, then goes into a higher high on the momentum. If we want to do that, ideally we want to close this somewhere in here at 66 to put a new high later on this week. That is the way to achieve that. That's not the forecast. The forecast is to focus on the check boxes I gave you earlier. So this light red, I'm gonna turn it now into a brown red. So I'm gonna decrease a little bit the bearishness at the risk that intra-candle today we carry on the bleeding. I just think that there is a chance that we complete the consumption in here at some point in the next few days. The moment we start doing that daily close below 102.8, I'm gonna put it back into light red. No questions about it. You can see the weekly is closing the mouth in here, but it can remain with the mouth closed for a few weeks. Just watch out with that. Volume carries on moving lower in this area, although the CPR level is still intact of 101.8. We got a pretty decent incentive now to go to the 100Ks, and I consider really bullish if price can maintain these higher lows that we have done so far in this range without hitting the 100K. And remember, if we just go to the 100K, we pinch it and we come back into this range and we reclaim levels of 102.8, that is the scenario of the liquidity hand to the downside. It is not necessarily a reason to say we turn bearish. Let's see how this progresses on the heat map in the 1 month. What is the largest liquidation level at the moment? Well, we took all the top. We haven't taken this 100 that doesn't appear in the liquidation heat map, but 92.5, 92.7 is the largest at the moment. Let's see how this got taken and what's left now at the highs from the past 30 days. It is quite small and is at 107.6. That's short-term liquidity, which we also agree in here on trading different. It's way smaller, and now the largest is that at 100K. It is the longer term liquidity, the one that could still bring the price into a new all-time high, assuming that we defend the support. And yesterday, remember, I made you aware of all these extreme leverage longs that usually get shaken out. You can see that they enter from here. They managed to get away. Some of them took profits halfway through. Then we have an impulsive move into 106 and they got taken out straight away back from where it came from. After that, they say we are done. Let's call it. Let's take profits, run away, end of the weekend. And here's the thing. We have as many longs as we had at these lows. When we started this move up from 101, we have 48% of longs. After all this decline, longs have come back to defend 102.8. That is because that is support. We'll see if they get away to defend those lows. And bid versus ask ratio on this red candle of rejection is where they came to defend it with a ratio of 11. They bought up all this way into the support and probably they are already allocated in those longs. That is what we can see with this increase into 48% from a low of 37%. Yesterday, with the move into 107, the delta went into 320k. They got liquidated immediately and back into flat. Right now, we have same amount of liquidations up and down in the short proximity of the price. Having a look now at the liquidation levels on fire charts, you can see that straight above the price at 104 we had 40 million, then at 110 87 million, that is pretty substantial, and 60 million at 120 that they are starting to short. Below the price we have just very mild levels at 102 with 27, 22, 18, 24, just 20s up until we get into 97k. But purple whales do not seem to have completed with the longs. You can see them positioned already in longs, and brown whales as well. It is retail that has currently taken some profits, so they might perceive this still as an opportunity to hit the highs once again. Fair value gaps, we have a leftover in here up until 103.5 that we were mentioning at the beginning of the video, and it's almost done. Below the price, the usual fair value gaps that we are hoping to take eventually. Let's have a quick look at Market Monkey Terminal. Let's reduce these levels. The order book seems pretty thin. Let's include all the exchanges. And we got some support at 102, some support at 101, and going lower, not much. And resistance starts from 108, 110, and 120 doesn't appear really here. 115 was just temporarily appearing at the top end. So the close down summary that I'm gonna give you, let me first mention that if you are going to trade Bitcoin or altcoins, have a look at this new campaign that I have down in the description for bluffing. 15% cashback is what you can get if you open a new account using that link. This campaign lasts until the 26th of May. And if you use this QR code, if you are already using my link in the description for bluffing, you can benefit by navigating there, validating your bluffing account, and entering a Telegram group exclusively for these people. We are using that Telegram group for you to say hello, and if you manage to meet the requirements, to get 100% discounts for products in my Patreon shop. Yes, that means you don't have to pay for the 3-month Telegram charts or for the Pine scripts. If it doesn't work for you, you're gonna find a link to my Telegram official channel in the description of this video, and just write down in one of these posts that I put there one comment saying, I tried the Telegram bot for bluffing and it's not working for me. Maybe you can share a screenshot or something that gives me an idea, then I can talk to the bluffing team and get it sorted. Some people managed to enter, some other people didn't, and we could investigate. So in a nutshell, what's going on at the moment? After having gone and put the highest weekly close in Bitcoin history, which is bullish and is still defending the weekly trend, the 4-hour is showing a little bit of fear against the events and the futures on general markets. That's why it's acting very humble and potentially failing that retest on the 4-hour. I feel like whales are still engaged with the idea of taking the highs and consuming further liquidity to the upside, potentially engaging into a short squeeze that could take the price of Bitcoin into all-time highs. Still, we have a bunch of bearish signals to cool down on what just happened. Longing from this area against the weekly and monthly resistance is what someone that is trading the weekly and monthly will do. You basically have both in the green but against resistance, and that is the compromise that you're taking if you're entering here like that. If you're betting on short, the higher time frames being in the green can have some downside, but you need to be careful with reclaims of support on 4-hour and daily, because our reclaim can be the beginning of what the whales are expecting to see on the highs. If you don't like the setup like this, with those ambiguities across multiple time frames, you can decide to skip a trade, but that is where we are standing right now. Guys, thanks so much for watching, and I'll see you in the next one. Take care, bye bye.